Hey there, investors. In today's video, we'll be looking at Alibaba. The ticker symbol for Alibaba is BABA. And the reason we'll be looking at Alibaba is because of unusual option activity. We look at unusual option activity because we want to try to follow the smart money. The smart money, remember, is made up of large, sophisticated institutional investors with buying power in the millions. These are investors who are either buying large volumes of calls thinking that a price of a stock is going to go up really quickly, or large volumes of puts thinking that the price of a stock is going to go down very quickly. So the good thing about looking at options is that they give us a time frame of when the stock is expected to reach a certain stock price, which is the expiration date. And they also give us a strike price, which is where investors think the stock price is going to move. And as investors ourselves, we can try to take advantage of that information by following those trades and take a more conservative position if it presents itself so that we can try to make a return on our investment. So remember, investors, these videos are for entertainment purposes only. Please check out the disclaimer in the description below, as well as other information that will be covered in this video. So let's dive right into what's been going on with Alibaba. So a lot of news has broken out on Alibaba, mainly around some regulatory issues that the company has been having with Chinese regulators, actually, not US regulators, which is kind of surprising that the company has had some investigation issues because of its monopolistic behavior. So looking at some of the stuff that's been going on with Alibaba in the news, we see that the stock has been going down because of this news. And so you can see the big dip there from its previous highs. So this is kind of more or less bad news, right? But however, there is unusual option activity that is indicating otherwise. And as you can see here as well, the regulatory onslaught has been criticizing founder Jack Ma. I guess he was criticizing the Chinese government, but mainly Chinese regulators are arguing that Alibaba had suspected monopolistic behavior. So taking a look at some of the action that unusual option activity is telling us, we want to try to see what exactly is going on with the stock and what do investors think about the stock based on the option activity. So looking at the unusual option activity, we see that 63% of investors are bullish on Alibaba versus 37% being bearish on the stock. So diving into the actual option detail, we see that there's a lot of volume for the option contracts within the near term of the 31 expiration. A lot of this actually has been traded, so most of these volumes here that you see for the $225 strike price has actually been traded when you look into it. However, you can see that there's also a lot of volume around the January 15th expiration. Now this is actually pretty interesting because when we look down here, we see that in the 250 strike price range, investors think that the stock could potentially reach this level a few weeks later down the road this year, or next year actually. So you can see that there's a big volume influx of 10,000 contracts for this strike price, which is pretty interesting and sort of stands out from the rest of the volumes that we see here. Although you can clearly see that some of the volumes are heavier, or on a total basis, the volumes are heavier on the 31st. However, a lot of these have been traded because of some of the action that has been going on in the near term. But investors in the somewhat short term to medium term are bullish on the stock. So looking into some of what's going on with the options, we can see that mainly, as we mentioned, Alibaba has been somewhat of an active stock among investors. So we see this in the most active stock options list here. So Alibaba taking the second place for the day, and you can see that the options volumes is pretty heavy. And the main reason being is that some of the news had ended up breaking out for ARK investment buying some of the stock in Alibaba. So if you guys are familiar with ARK investment, this is an ETF that is actively managed by Cathie Wood and her team. And Cathie Wood is of lately has been increasing in her popularity because of her bullish $4,000 call on Tesla, which is getting actually close to that strike price. And ever since then, she's kind of climbed up the ranks in um, celebrity status among investors. And so a lot of investors are paying attention to what her ETFs are doing and sort of what they're buying and selling. And one of those buys that they made today, actually, looking at this website that tracks some of their purchases for their ARK ETF. As you can see here, ARK ETF Innovation, ARK Q for autonomous robotics, and ARK W for internet. You can see that they made a purchase of 15 million in shares of Alibaba today. So this is daily buys as of December 28th. So we can see that that is essentially what could be behind this rally up here and this move up to the upside and ending on a pretty good close from the low. So the stock did encounter some pressure because of the news, but then quickly rebounded and was and experienced really strong buying from big institutional investors. And as we can see here, it appears that one of those investors was actually Cathie Wood and her team over at ARK. So you can see they bought $15 million worth of shares, adding to their position and overall increasing the weight of their position in Alibaba to 1.2 through this purchase. And you can see that through others various websites that track her ETFs. And I'll be posting the links in the description to these sites down below. So you can see here as well that ARK has been pretty active. So they're actively managing this portfolio. And if you guys are familiar with the ETFs, the returns that they have generated so far have outperformed the S&P and the average returns that investors generally experience. So you guys can take a look for yourselves here, but you can also see that in the ARK W ETF, Alibaba makes up 1.2% of the total funds value and 2.6% of the total fund value for ARK F, which is the fintech innovation. So with all that being said, there's even with the onslaught of bad news that would come with some regulatory issues, a lot of analysts are saying that should the investigation's conclusion go against the company, the impact will likely be less than meaningful than expected. So you can see kind of a trend going on here that although they're being slammed with these regulatory issues, investors such as Cathie Wood and big institutional investors, as well as analysts, are saying that the stock actually has a lot of upside potential, with a few analysts still giving strong buying ratings with a 330 price target. So that's an upside of 48% from the current levels. So overall, in the short to medium term, investors are pretty bullish on Alibaba and the potential that it could bring. So now that we kind of understand what's driving some of that unusual option activity because of the news and the buying that's been going on, we want to take a look at what positions investors are actually taking. And if you remember, we looked back at the option chain and we noticed that this 10,000 volume of calls stood out right away. So we can see that investors in the medium or short to medium term think that Alibaba could climb up to 250. So let's take a look at some technical analysis of the chart to see if the stock could actually hit the prices that investors think it will. And even more conservatively, some of the prices in high volumes that we see here. So to do that, we'll do some technical analysis around the chart. And I've done a little bit of lining and graphing myself just to speed up the process here, but you can see that overall the chart, the stock has been on an up trajectory, right, and recently broke that trend, which you can see from the lower moving average of 20 days crossing pretty much all the other higher moving averages, which are the 50 and the 100 lines here in orange and red. So you see that the trend is going down. However, if you map the levels where the stock couldn't break past, you see that this line right here has served as levels of resistance here in the past, as well as levels of support here where the stock has consolidated within this range. And you can see that here as well, level of resistance, and then another level established here, but then consolidated, broke back down, made it, couldn't get past that other level, and then consolidated within this level of support. So this line here where the stock actually ended up bouncing back from in these two previous days has served in the past as a level of resistance and support, which is a very good level that we can rely on. Of course, these are historical movements, but could be pretty indicative of future movements and where the stock could go. So if we look at these levels, we want to see exactly what the activity has happened here. So to look at that, we want to see some of the consolidation that's happened here. So if we dive right into the detail there, we can see that there's almost some symmetry going on in this point here to where we're at now. You can see that this green bar on the uptrend before it broke out was trading right above this 20 moving average, which falls roughly around 220 and 59 cents, which you can see over on the far right of my screen next to the scrolling bar of my browser. So you can see that the moving average here in yellow fell at 220.59, and the trend momentum here with this green candle bar was right above that moving average. So that's a good indication telling us that if the stock is trading above that moving average, there's good momentum that could indicate that the stock will break these levels of resistance and go back up to the upside. So we look at that, and we also see some consolidation that happened here, right, where that same level actually here of resistance was tested once here and twice here, where it actually ended up breaking. And it just so happens to be that we're almost back at that same level here with this first green candle bar forming and testing somewhat that level of resistance. So potentially the stock could break back up. On the downside, we see that in the past, this level below has served as a level of support. So if we look at this candle bar here, we can see that if we zoom in a little bit, we can see that this candle bar here, this candle bar here, and the candle bar where we're currently at share a lot of symmetries and sharing the same line of support and resistance. So you can see here that the stock was climbing back up but didn't have the momentum it needed, and then traded back down, testing this level of support, and then went back up, and then also didn't have the momentum and kind of went back down, but then slightly broke it and came back down, right? And then we see that. So this level of support here was tested once and twice here. So this is a good level of support that we can also use to determine where we think the stock will be going forward. And with another thing to look at as well when we look at this chart is the buying volume. So you can see that as we analyzed in these candlesticks here, which are really small now, so I apologize. You can see that these two levels of supports here, these 2 points were previous good indicators, and that is the case here as well. But that is also backed by the reason that there's a lot of buying volume that we see here. So you can see this huge volume of buying, roughly around 141 million. I'm looking over here when I hover at this green candle in the volume down below here. So the volume is in roughly 141, 830 million in volume. So that's really good volume of buying supporting this level here. So investors think that this is a good level to buy in, so it has strong buying support here. So that's a good level right there. So with all that said and done, that helps us, formulate our technical analysis of what trade position we would want to take when we look at Alibaba. And that being said, the idea really is to follow the smart money here with getting the January 15th expiration at the 250 strike price, which just happens to be pretty cheap, and we want to get that right above that pivot point of 220.89, which is fairly close to what our moving average was here in the past of 220.32, give or take, or 54.81, right? So that's a good indicator, because in the past we see that when the stock was trading above that moving average and the momentum was in favor of that trend, it broke past these levels and went just skyrocketed from there. So that's a good indicator. If we're trading above that again, it's been tested in the past, so it's likely that if we're trading above that in a bullish market, then it is likely that we will continue on the upside. And from there, we want to look at the target levels, which have been established using our trader's cheat sheet. But since we have good historical price action for this stock, we can also look at the candlesticks. So you can see here 224.99 would be the next high, and then so on and so on. So those are our levels there. But you can see here 225.11 would be the levels where the stock was previously tested at here. So whenever it was tested in the past, say over here, we see that the stock climbed up to a high of 225. So following those levels, these would be the levels where we would take profits, and then climb back up to 230 when we look at this range here. So to a low of 232 roughly, and then here broke past this level of resistance to a high of 230. So give or take, the next level would be 230 to 232, and then from there, we on the upside over here wasn't able to break past that, but over here we got to a high of 240. So on the upside, it's pretty favorable if we continue that trend. Now again, we always want to set stop losses. So anywhere with the stock trading below that 220 previous level that we saw here with this yellow line, then anywhere below that we want to be able to stop our losses there. So that would be our stop. Now in the short term, this trade has the potential to have some downside because of some of the regulatory news. So on the downside, we want to look at potentially getting the 1231 220 puts for 256 below that pivot line, and then looking at support levels based on the support levels that we see here. So as you can see here, it broke it, so at least climbing back down to 213 eventually, so 215, 213. So those would be the levels there. And our stop loss for puts would be with the stock climbing back up past the 220.89. So remember, the this trade in particular could either with the bullish market could take a few weeks to reach that level till more investors catch up to the sentiment that the stock is cheap and that the company is still strong. And in the short term could take a downturn based on any news that comes up or any developments. So just want to also provide a few quick reminders when setting entry points and things of that nature. A few things that I've noticed just from experience. A lot of the stock movement is really volatile in the first 30 minutes of the day to about 30 minutes to an hour. So typically what I like to do is wait like 30 minutes or an hour after the market opens to try to see where the stock is going, sort of what positions to take. If the buying volume is strong, however, in the first few 30 minutes and it continues in that trend, so anywhere above 500,000 to 1,000,000 more in volume, then that's usually a good rally and it could be a very strong bullish day. However, sometimes it's a false quick rally and then it comes back down. So that's another thing to know when you guys are setting entry points, and always monitoring this. You don't always have to come in exactly at these levels, but if you see the trend continuing, for example, if the stock is currently trading at 228 or 220 and you see that the stock is coming back down, then you wouldn't want to necessarily get in yet. So you want to wait till more selling happens and then you'd kind of get back in. So for example, if it was trading above that 220, which would be, for example, here, let's say the market opens here and you see that it's already trading, right, and you think, oh, I missed out. However, sometimes the market fluctuates and it trades back down, and vice versa, it could go up. So that's why we want to look at volume and see if the volume is strong enough to continue here, and how does the volume compare from here to the next candlestick, and then that will help us determine whether or not we have a good entry point. Another thing to note is that a lot of the investors that I follow on CNBC and a lot of notable investors usually set like maximum stop losses at whenever their losses reach 50%. Now that's pretty steep, but again, it's always a good indicator just because sometimes you do get a lot of volatility, not a lot of action. So remember to kind of trade with what you can actually risk, and this includes also remembering not to allocate more than 5% of your portfolio on a single stock or trade, just to reduce that risk on any losses as well. So you could trade, say, like $200 and experience I don't know, 50% loss, and that might just be $100. But if you're trading 2,000 and experience a 50% loss, that might be $1,000. So you want to be able to sort of gauge how much, what's the size of your trade and what does that mean in terms of percentages and losses. So be able to determine that. And also, guys, remember, since we're looking at unusual option activity, and this is an important point, you want to be able to monitor the open interest on the trades that you enter. So for example, if I were to get into these January 15th 250 calls at 151, we can take a look at what that would look like. So you can see here there's like 5.7 million of these contracts open, which is just insane. And these are still open, right? And that's the important point. If, for example, you buy one contract, you want to be able to monitor the movement of these investors. So if all of a sudden you see that the open interest goes back down to 0, and now you see that the total volume is 47, you obviously know that these investors here who were holding these contracts sold out and then ended up moving that volume to, and that volume became the traded volume. So you want to monitor whenever the big money, the institutional investors, actually sell out. And that'll usually give us a good indication of when we want to exit some of these positions. It won't be necessarily the only indication, but it would be a strong indication because, you know, that's what the smart money is doing. Remember, these are sophisticated investors. They have a lot of information at their disposal that they either pay for or own proprietary um, information or rights to, such as patterns or algorithms that have been proven to generate returns for them. Um, and that's why they're known as sophisticated. So a lot of these investors spend a lot of money on obtaining information to help them to their advantage. So what I like to do typically is, you know, usually try to follow the open interest and kind of monitor my positions. So whenever I see the open interest close out, you know, that's when I'll typically close out. Again, it also kind of varies. Sometimes the stock climbs up really quickly, and if you feel comfortable taking the gains and maybe missing out on some potential gains if there's still open interest, then that's okay too. Whatever you feel more comfortable at the end of the day. It's really just a matter of gauging where the momentum is. But again, this is the smart money, so you definitely want to monitor that open interest. If you're still in these contracts and a lot of the investors that were in these contracts haven't sold out yet, then there's good potential that the stock price will eventually reach the strike price that investors are betting big on. And again, nothing is certain, but there's a good likelihood, and that increases our probability of having some returns. And so another thing is as well is that when you're monitoring the open interest, you also want to take into consideration where the stock is trading at. But the main important point there is just to continue monitoring the open interest to see when it would be uh, a good time frame to close out your position. And so I'll just end it with that. Thank you again for watching. Stay tuned for more videos and remember to like and subscribe if any of this information is helpful or useful to you. Thanks again.